So announcements and press conferences, can you give us the rundown?
Rates are a long way from neutral, and that was a hawkish line that spiked the dollar and crashed stocks just by one line. So wording is very important.
Traders, they might be looking for what looks like very small and simple change in the wording of a statement, but that might open up all sorts of different avenues and possibilities.
Usually when it comes to Fed, at least, the much anticipated is the press release rather than the actual interest rate decision.
But what else do you think we can do to try to have a better idea of what's going to be discussed? Hello and welcome back to Trading Talks. Last episode, we discussed about divergence in monetary policy, and following on with a similar theme, this time we're going to be talking about central banks' announcements, how to read the announcements, how to monitor the press conferences and different answers, and how possibly to predict some surprises before they happen. If you haven't done so yet, please subscribe and turn on notifications to be aware whenever the next podcast has come out. Now, for today's episode, I'm Michael Stark, Financial Content Leader, and joining me to give us insights is Antreas Themistokleous, Trading Content Specialist. Welcome, Andreas.
Hello, Michael, and thanks for joining me.
So, announcements and press conferences, can you give us the rundown? What is what would we expect in the announcement? What do we expect in the press conference? Very basically, how does it go, a central bank's meeting?
Yeah, so it's split in three parts. So we get the rate decision, then we get the statement with reports, and then we get the press conferences.
Mm-hmm.
Usually when it comes to Fed, at least, usually the much anticipated is the press release rather than the actual interest rate decision, because more or less by the time that we get the Fed meeting, the probabilities have priced in, let's say. So press conference is what traders are anticipating the most to get, because you get more, insight.
Yeah, that's true. But there's also, maybe in the statement, there's also some particular specific things that we look for. Like traders, they might be looking for what looks like very small and simple change in the wording of a statement, but that might open up all sorts of different avenues and possibilities in the future.
Mm-hmm. Yeah, phrases by Jerome Powell, which is the chairman of the Federal Reserve, not just on the meetings, but throughout his different appearances in symposiums or conferences, can just move the market without any change in the interest rates, just by a single phrase by the Fed chair.
Yeah, quite. And I think in the statement specifically, if you've had in the statement the previous 5-6 statements, they've been saying that they think inflation is transitory, as we had for a while, and then they suddenly drop transitory, then immediately a lot of people are going to start thinking, okay, rates are going to have to go up further, or rates are going to have to stay higher for longer. This sort of thing might seem quite small, but by contrasting it with several previous meetings, then that's one way we can quite quickly get an edge when we just compare the two statements directly with each other. So, but what else do you think we can do to try to predict what is going to happen not predict, but try to have a better idea of what's going to be discussed? Do you think there's any particular economic data that we can focus on, or do you think there's any particular other factors that we could focus on to try to have a better estimate of, how roughly is this press conference or this statement going to go?
Yeah, so between Fed meetings, we get around, 40 to 50 days. So in between those meetings, we get a lot of data like new inflation, labor market, which is the non-farm payrolls, and the unemployment from the US. We get the GDP, we get all sorts of data between the two meetings. So usually the most influential factor to the Fed is inflation, obviously. So automatically, when we see inflation rising, especially more than anticipated, for example, currently it's at 2.4, right? So, and the expectations on June is to go to 2.5,
right?
Just 0.1% increase. Now, if we get a reading of 3%, for example, which is much higher than what is anticipated, that means that the traders will be expecting some more hawkish stance, at least by the Fed. Of course, it's not just inflation, it's more data, but you get information in between meetings. So you can more or less anticipate what the stance will be by the Fed. But it all comes down to wording, right?
Yes, that's right.
So
let's talk a bit about that.
We get a lot of, we need more data. I don't know when enough data is enough for the Fed. They always need more data.
Yes.
Right? So, for example, back in 2018, I quote here that Powell said, rates are a long way from neutral. And that was a hawkish line that spiked the dollar and crashed stocks.
Yeah.
Just by one line.
Yeah.
So wording is very important to the market, at least.
And I think also important is that, the personalities of the central bankers, which we could kind of develop. But let's talk a bit more about wording first. Yeah, if we can. If you've got any more examples of wording you'd like to share. Because I think that is something quite important. Because if, sometimes we don't have that much time to really sit there and analyze a lot. It's nice if we could just immediately interpret jargon or, coded language, let's say. Yeah.
Yeah. So, okay, I have some here. I mentioned the first one. We are data dependent, which means that they are unsure and they are keeping flexible, right?
Yeah.
So they keep both doors open, hiking, holding. Then we have sufficiently restrictive. That means that they think that interest rates are high enough, sufficient, restrictive. So enough is enough. Probably we're right there. Then we have risks to inflation remained. That's a hawkish lean, meaning that inflation is getting higher. Risk related to inflation are getting higher. It might start affecting the economy or the labor market. So it's a more hawkish tone when you hear risks to inflation remain. That means inflation is more sticky than we anticipated.
So yeah, that's a good introduction to the topic. And if you want to learn more about these buzzwords, buzz phrases that central bankers use, and other ways that you can trade more actively the statement in the press conference from a central bank, please click the link in the description below, and you can go to the article of Exness Insights, which explains this in more detail. And I think another important factor is the personality, inverted commas, well, the personality, but the public persona, if you will, of central bankers, which is developed. Because back in 2018, when Jerome Powell says something like this and it has a significant impact, we see essentially the opposite from him now. He usually goes and he tries to calm markets down, Yeah. And I think one specific time that I remember, because, Mario Draghi, who is the previous governor of the ECB before Christine Lagarde, he had a reputation for being phlegmatic and being like emotionless, like kind of like a robot. And on the occasions when he did show some emotion, which I mean, in that stereotype or that impression is questionable, but maybe has some aspect of
subjective
truth. Whereas in some cases where he definitely shows clear emotion, then the market, in the short term, goes pretty crazy. And I think the same probably applies to other central bankers as well.
Yeah, for example, for the Fed's meeting, when you watch the press conference, which is chef's kiss in some cases, right? You see straight up questions from journalists trying to get the clear image. Like, we've heard what you said, but are you done hiking? Like, straight up asking, are you done hiking? Is everything under control? And then it's not just how he responds, but it's also the body language.
Yes.
Because if you're saying, nah, we're okay, but then you're showing fear, for example, your body language does that. So it's also a sign that probably we're not okay, right? So it's also not what you say, but also how you say it.
Yeah, that's true. So let's look at a practical example. And why don't you choose? Why don't we look at whichever example you would like to look at of how a certain big instrument actually moves around the statement and around the press conference, and your evaluation of why you think that's happening.
Yeah, sure. So we can check on EURUSD, for example.
Okay.
We have on the 7th of May, the latest Fed meeting, which was expected to hold at 4.5, and it actually did. But what's interesting is what happened on the daily chart, for example. If we see on the 7th of May, we see by the 12th of May, we've seen a big bearish move following that.
Right.
Because rates are kept high for quite some time now. But immediately after that, we see that the EURUSD pumped to the upside and it recuperated the losses incurred between the 7th of May and the 12th, and is currently broken even above the medium-term high. So we see this bullish trend on the pair that is still holding strong. So I think there is no obvious signs of slowing down. Probably we might get some sideways movement at the current area just above 1.15, but there is no obvious signs just yet for a reversal or a major bullish correction, at least. Bearish correction, sorry.
Yeah. So, I mean, I think the overall kind of takeaway there from that chart, for me, would be, yes, we can trade these meetings. Yes, we can trade, the price in the direction that it should, inverted commas, go. Just don't hold it for too long, because sooner or later the other factors are going to reassert themselves.
Yeah. Or you don't know how fast the initial reaction will be corrected. Right.
Okay, makes sense. All right, so thanks very much, Andreas, for being here, for giving us your insights.
Thank you very much.
And thank you also to our viewers. And I would remind you, please do subscribe, turn on notifications so that you can be always aware as soon as the next episode of the podcast is released. And hopefully we'll see you there.